Okay, we made it. Welcome everybody to the weekly roundup of the Hart Investment Group. I'm Scott, that's Ben.
Hello.
And we're excited because it's Ottawa race weekend. And our very own Ben Hart will be attempting the full marathon this weekend. I don't know if you were telling people that, but I just did. So you're welcome.
Completing the full marathon this week. Not attempting.
Oh, sorry. Completing. Yeah, we're putting it out there in the world.
Yes.
Yeah, you're a wily veteran anyway of these types of races, aren't you?
Gonna grit it out.
Yeah.
Should be a fun time.
Yep. I will be down there cheering you on.
That'll be nice.
From the sidelines.
Always appreciate the support.
Yeah, there you go. All right. Well, since we're running a little late, let's get right into it. How was the shortened week?
Oh yeah, I forgot it was a short week. Lots happened in the market still this week, though, even in a short week. But most of the attention continues on what's happening with the debt ceiling in the US. What's going on there? What are they going to do? A few reports out from some of the banks just talking about what's happening with rates in both Canada and the US. There was a couple of banks in Canada that said potentially more raises, which is quite surprising for me, but that came out. I think we're still on hold in Canada and the US for the foreseeable future, and we'll look at the data a bit, but most of the attention's been going towards that. Last couple of days, markets were pretty happy. Growth had a good week here, so some of the stuff we own, like Meta and such, touched 52-week highs this week. So just deciding now what to do. What do we do? Is there opportunities elsewhere? And the last couple of weeklies, I think we've been talking a little bit about commodities, which I've started to think about again. We'll touch a bit on that as we go through the presentation, but yeah, growth's had a good rip back, and just trying to decide where we are and what to do from here.
Awesome. Okay, well, let's have something else to add. Let's keep moving forward here. Get right into the charts.
Yeah, sounds good. Just let me know if you can see them.
That I can.
All right, good. Yeah, so I thought I'd go through a little bit. I mean, in some of the dailies I've been talking about just what's happened with the rate market and treasury bills. And so if we look at the chart here, we're looking at these blue lines. This is effectively today. So we had, if you look back to kind of the start of the year where we were, this is kind of where the maturities were in the start of the year for June 1st. And now we've seen a pretty material spike up to kind of almost 7% on the 1 month T-bill, which doesn't make really a lot of sense, because you'd assume that the government, if they're going to make good on their debt, they're going to make good on all of their debt. So a front end up to 7%, where kind of the rest of the market is around 5.5, doesn't make a lot of sense. So something's going on in that market, and so I continue to watch it. I think the reason why it's getting more attention this time is because it didn't happen in 2013 or 2011, the last time we got into these kind of debt ceiling discussions. And so certainly worth paying attention to and seeing what plays out. There's discussion that Yellen can stretch out how much money is left there, but I'd say is about 100% certainty that they run out of money early June if they don't come to an agreement. So that'll continue to grab attention from here. The likelihood, though, is that as we move through the other side of this, the market will start to focus a bit more on what's actually happening in the economy again. So that's what's grabbing the attention now, and starting to think about what's ahead. So if we look at this, I've been putting it up for a while. 2 is 10, so this is the 2-year bond, which is here, the 10-year bond, which is here, and there's 0.71% effectively difference from the 2 points. So we went from inverted almost a year and a half ago now. If you look historically, from point of first inversion to official recession, it's about roughly where we are today. So as we see this tick down again, there's kind of this thought that maybe we're going to start to reaccelerate. but no, it's rolled over and started to invert even deeper again. So I don't think anything's really changed too much in the economic picture, but certainly worth paying attention to what this means longer term. So if you look at these charts, I've put these up before, but it's been a while since I've had them up here. And this is just the earnings for the quarter for the S&P 500. So 485 of the 500 companies have reported earnings so far. And, you know, everyone uses data differently, but I would look at this in a way and say, okay, what am I interested in here? Where do I think we are in the cycle? And as I mentioned on the outset, and I think that maybe commodities are worth looking at. Okay, so we look over here, 29 of the 29 materials companies reported sales growth of a -8%. They've also reported earnings growth of a -26%. And then you look at a stock valuation, for example, where you'd look at like a Nutrien, which is cut in half from a year ago, down 50%. You'd look at it and say, okay, where do I think we are in the cycle? What are the earnings doing? What are these companies done, missed? Okay, well, what's the likely path forward from here? And you'd look at it and say, like, some of these big negative numbers would be areas you'd want to start considering as potential opportunities to add into the portfolio in the next quarter or two. So that's how I'd look at it. But everyone wants to look at it a different way. Effectively, though, we're seeing the first quarter of an earnings recession. So I put these up before. This is GMI's Financial Conditions Index. And so if we look at the white line, which is the ISM, ISM is from a simplistic perspective, why do we care about it? 50 is the middle, above 50 expansion, below 50 contraction. So effectively, when you're thinking about the economy, lots of people use ISM as their major gauge to decide which of the side are we expanding or contracting. You look at the white line going obviously jagging up and down. This is from 1985 until today. And then we saw ISM collapse, or we have seen ISM collapse. And so ISM now, and this is US ISM, is negative, negative 40, we'll say 45. So down kind of 5 from the medium. And then we look at the GMI, which is a research place that we look at, the Financial Conditions Index with a 9-month lead. So like, what are the financial conditions ahead of us? And so if you look, ISM's cratered, but financial conditions looking forward with this information starting to point to easing. But easing isn't where we are today. Easing is, it looks like, where we're headed, which is lower rates, both from a short-term central bank perspective, but also lower rates from a bond perspective. Last one on that is just kind of the weekly global liquidity. So this is the white line here. If you're following the white line, this is the global liquidity index. And so we saw liquidity, as we've talked in past about M1, M2. This is kind of money in the system. And if we look, it looks like we bottomed around September, October, November last year, where liquidity reached kind of the lowest point. And now we're starting to come off the bottom of that. And so again, another gauge for financial conditions from here is it looks like we'll get more liquidity into the system, given where we are and the inputs and the constraints that there are on the economy. Likely ahead, which is looser financial conditions and lower rates based on the backwards looking economic data. And so the last one, which I always like to talk about, something either ESG or Web3 based. Obviously plenty of things to talk about in the AI Web3, but I had a client to ask about Norway and China, or sorry, excuse me, Norway and Canada, and just kind of the nuances. Norway and Canada have similar mining and energy footprints. Norway's taken one path where effectively they're putting all the money that they make from their, we'll say, mining and energy exploration, and they're investing it for the country longer term, not just going into the general account. And they've been super successful with that. And Norway has the view that they'll be carbon neutral in 2027, which obviously is quite aggressive. And so this is an interesting report kind of talking about how that's going to play out, and can Canada follow kind of the same path. And if we look from a scores, ESG scores in the world, Canada is certainly right up there. but what they do with the money versus Norway is quite dramatically different. So interesting report to have a look at. If anyone's interested in the full thing, I can send it along. And then I guess from a Canadian perspective, I put this chart up. This is the global fertilizer supply chain. And so if we think food's going to continue to be an issue globally, and you think that there'll continue to be constraints in fertilizer in the world, then you'd look at the world and you'd say, okay, where is potential opportunities? And as I mentioned earlier, Nutrien as an example, obviously one of the big potash suppliers of the world. Stocks come down pretty hard, dividends pretty good. Canada is going to need to supply some of the fertilizer for the world. And as the economy starts to accelerate again, they're going to need more of it. And so I'd look at it from the perspective of where are the opportunities here. And I think Canada is in a good position to benefit from some of the things happening in the world.
Awesome.
So that's it I have for the charts today.
Great charts today. Very
Thanks.
informative. So you mentioned that one that if people wanted the full version, just email you directly.
Yes, please.
Okay.
Yeah.
Ben.hart@nbc.ca. Okay. So what's in the crystal ball? What are we looking to for next week?
So we're getting into the end of May. It's been a more challenging month in May than the first 4. So we'll see what happens from here. We had growth going to do well this week. Some of the other areas continue to come under pressure. So Canadian financials had a big earnings week this week where Royal Bank increased their loan losses. A couple of the banks like BMO hit a 52-week low. You know, if you look at these, I'd continue to be digging around, trying to pay attention to what's happening with the Canadian financials specifically. This is a report that we published, which I'll put out a chart on recently or next week. But it was talking about Royal Bank's exposure to commercial real estate. So roughly 20% of their loan book is commercial real estate. And so they have huge commercial real estate exposure, particularly in office in Canada. So I'd be digging into trying to look at the banks a bit more, because historically when their dividend yields start to approach 5%, and their price earnings start to approach 8 times, which is where we are now, they present good buying opportunities. So I'm going to be digging into that a little bit more next week, and just seeing if those are opportunities or something to continue to stay away from. And yeah, listen, we need to get through the debt ceiling because it's grabbing a lot of attention. Ultimately, it's going to get passed, but it's created a lot of choppiness into the market. So we'll watch that and continue to pay attention to see how that plays out over the next week and a half until that's done.
All right. Still deep into quad 4 here.
We are, but I think as we see these areas start to bottom, where last couple of weeks I've mentioned like copper and potash and some of these other natural gas, like some of these commodities are starting to show these bottoming tendencies. These are the things that happen as we start to get to the end of it. But certainly the data continues to be contraction area, which is inflation growth slowing together. That's classic quad 4.
Okay, great.
Yeah.
All right. Anything else before we kick off the weekend?
I don't think so. If you need anything, certainly let us know. Renat's been booking meetings and sending out notes. So if you do get something from her, please have a look and respond. But we've been going through doing reviews. And if you need anything else, certainly let us know.
All right. And if people are downtown enjoying the race weekend, what's your bib number on Sunday?
2150. 2,150.
2150. Okay. All right. Well, good luck this weekend, buddy. We'll see you down there, and everybody else, we'll see you next week.
Take care. Thanks.